Is the thinking behind the inclusion of Boral in our model portfolio? Can you give us some background on Boral and why you like it?
I brought Boral to the investment committee about 6 months ago. The major attraction to me at the time was about 4 factors. One, the portfolio diversification of the diversification of the model portfolio. I thought, given what's happening in the economy in terms of construction activity, we had to have a position there. And Boral did attract me because of its strong bias to New South Wales. About 40% of its revenue comes from New South Wales. And in terms of the macro outlook, everyone's focused on housing, but as we saw yesterday with the Badgerys Creek announcement and the West Connect, etc., you're starting to see some significant upswing in infrastructure, particularly again in New South Wales. And Boral's got some strong exposure to both Asia and the United States, where you are seeing some, particularly in housing in the US, coming through. And obviously those overseas earnings, the dollar-A weakness is going to be beneficial there. And the fourth main reason was I'm quite attracted to Mike Kane, the CEO. I think he's been a real catalyst for change within Boral, and I think the market's starting to see that. If we go to the next slide, you can see its earnings growth since 2012. And just bear in mind that Mike Kane was appointed CEO at the end of 2012. But you can see the EPS has grown from 13.5 cents to 32 cents. The share price is up 40% over the last 3 to 4 years. Now, they asked, their guidance for FY16 is for fairly flat line operating earnings due to softening demand in Australia largely. The major factor that I'll come to in more detail, but it's basically the infrastructure side. With the mining sector down, engineering construction is still quite weak. Now in terms of the market valuation, prima facie, looking at 16 times FY16 earnings, not overly attractive, but you wouldn't say conceptually cheap. But you look through to FY17, when you start to see the infrastructure pick up in Australia, and also some continued growth in the US, and the growth they expect to get out of their Southeast Asian businesses, the PE drops quite substantially down to about 13.5, with a gross yield about 5%. So, that's the fundamental metrics that appeal to me. Just going through the business portfolio, the next slide. About 30% of their earnings come from housing. At the moment, there's some prospect of softening if unemployment goes up, but the pipeline of work is quite strong. And as I've said before, Boral is very strong on the East Coast, which geographically is where the housing sector is the most buoyant. And so I'd like to expect that to continue to be relatively strong. In terms of the infrastructure expenditure peaked in 2012, but it's weak since then, and it's expected to continue to be weak until the end of FY16, and then to pick up with public infrastructure or transport infrastructure expected to pick up, particularly in New South Wales. And that downturn is largely to do with the mining sector. And just the last area, the US housing activity. You've got to remember that in 2005, there was about 2 million starts in the US. It bottomed in 2009 at 800,000, and it's now expected to come up in 2016 to that 1.2 million, but it's still significantly below, and it may surprise on the upside. It is recovering probably better than expected. And then there's another fundamental attraction. They've gone to a JV with USG of America in fiberboard, and that's very plasterboard, sorry, and that's very strong across Southeast Asia. There's about 12 manufacturing plants, China, Korea, Southeast Asia, and Australasia, and there's some strong access to technology. So that's it's only 8% of their revenue at this point in time, but that's expected to grow quite strongly. And we go to the next slide. There's just lastly the gearing. Boral's gearing at 6.15. It's about 23%. there is a prospect that they'll look to grow their US business through acquisition, so that's something to keep an eye on. But 23% gearing is relatively attractive. I just mentioned the strong management team. Mike Kane, as I say, American, came to the company at the end of 2012. Since he's been there, 4 out of the 5 operational execs have been appointed since 2010. He's brought a little bit of a clean sheet to the company, and he's certainly focused on cost and rationalisation of the business portfolio. There's been a lot of small divestments, etc. I think it's fair to say that Boral's management team's KPIs weren't terribly onerous, and I think Mike Kane's brought a bit of strong management disciplines of the business. He's also, just the next slide, sorry, he's repositioned a number of business units to maximise growth. As I mentioned, the JV with USG. They've also established a joint venture with CSR for East Coast Bricks. At the moment, between them, they've got 12 sites operating below 70% capacity, so there will be some rationalisation of capacity coming through, which will be beneficial to the company. And lastly, Mike Kane has been probably at the forefront of taking on the CFMEU in terms of the bands in Victoria. He's won that, and I think there'll be some benefits from that. But the other suppliers, etc., backed off, but he was willing to support the principle that he could supply clients, which is great on fundamentally. So that also, to me, shows a bit of internal fortitude. So overall, good growth, good management team. It's well positioned given where I expect the economy to be in the next few years, particularly with infrastructure expenditure. And as we talked before, with the Australian dollar down at 70 cents, there's a good translation benefit coming through. And the US business with that fall in housing, they actually went into loss. And last year there's a $50 million EBIT turnaround, with housing going from about 800,000 to up to about 1.2 million. You'd expect quite a strong recovery there, and that'll underpin particularly FY7 and its earnings growth. Okay, thank you.
Thanks, Clarke. Question? Yep.
Just a question about the price of Boral now. It's been dropping quite substantially since you made your recommendations and since I bought Boral shares. I'm just wondering whether you think it's a good price to buy where it is now.
I've got no reason why you wouldn't buy Boral right now. Its share price performance compared to the market is probably not too different to what we've seen in the market the last few months.
Why is it fallen more than the market? Has it fallen more than the market?
Clarke just said it hasn't. It's broadly the same. Okay.